All right. Hey, happy Friday, everybody. You made it. Here we are. A lot of you are going to be looking at houses this weekend. If you are, this is information that you need to know. In this video, we're going to talk about interest rates. We're going to do a little quick and compare. We're going to talk about home builder sentiment and why that's important to you. There's a lot of great information here. And if you guys have any questions, I will be around this weekend. Give me a call. We're here to support you and your family as you go through this path of homeownership. What do you say we get started? Let's go ahead and bring up our first little slide here. Let's talk about our Rocket Mortgage experience here. Now, Rocket Mortgage is a great mortgage company. However, they don't have the best rates as everyone thinks they do. In this particular video, we are going to focus on their VA loan. Now, it does appear that a 6.49, if you take a look at our rates, is a 6.25, really isn't that much of a difference. However, 0.25% of difference in interest rate is a lot, but take a look under points where it says two points, and then in brackets, it's $5,500. Now, keep in mind, that is not how much 2 points cost. 2 points is 2% of the loan amount. So, for example, if you had a house, we're buying a house for $500,000, that would be an extra $10,000 to get a VA rate there with Rocket Mortgage. So, hey, if you're a veteran, especially if you're a veteran or using an FHA, you need to shop with a broker. And that right there, my friends, even if you don't use me, is going to tip. That's going to save you a ton of money. So let's go ahead. Let's talk about the market. Last week, Consumer Price Index. Remember, this is huge for interest rates because Consumer Price Index, or CPI, measures inflation. The Fed's target goal is a core of 2%. Now, how does this impact 30-year fixed rates, and how does the Fed fit into this? You see, the Fed, they don't really have a direct relationship to 30-year fixed mortgage. However, bond traders are watching what the Feds do because that's going to dictate how they feel about inflation. Inflation is the kryptonite to 30-year fixed rates. We had some better than expected news in May. As you can see, from April to May, inflation did come down, but is that going to be enough for the Feds come July to reduce short-term interest rates? Now, don't get it twisted. If the Feds will reduce the short-term interest rates should go down, but it's not a direct relationship. Bond traders or 30-year fixed rates will take a look at that and go, well, the Fed now believes that inflation is under control, so therefore we can reduce our prices or increase our prices for a lower interest rate as well. So that's the things that you want to focus on when it comes to whether or not interest rates are going to come down. I mean, they've been saying, marry the house, date the rate. But you've been dating this rate a long time, and it's a bad relationship, let me tell you. All right, let's get to home builder sentiment here. I'm going to make this a little bigger here. Now, home builder sentiment, anything above 51, they feel positive. That means they're going to build houses. Anything below 50, 0 to 49, the builders are feeling negative. March and April, they had a positive feeling. Come May, it dropped 6 points, and we think in June it's going to be reduced as well. There's many components to this. I mean, take a look at current sales expectations for June 2023 to June 2024. Future sales, right? Buyer traffic. I mean, we're starting to see things starting to slow down a little bit from that respect. And you guys, if you take a look at the last couple months, where have the interest rates up? It seems like whenever the interest rates peak, everyone slams on their brakes and they don't go by. But when rates start getting in those mid sixes, you see a flurry of people out there. So this is not a doomsday thing. This is just, hey, this is something that you should be looking at going, hey, if rates go down, what's going to happen? Is it going to create more traffic? When should I buy, etc. All right, there you go. Let's bring up our next slide here. New home construction. What's important here is that we don't really have a rate issue. We really have a supply issue. And if we're not building homes, if builders aren't feeling positive, they're not going to build more homes. So what's really constraining them is higher costs are constraining builders, which means tighter future inventory. And this is going to support more future home value appreciation, as we progress down this trend, especially if interest rates do go down. Remember, more people out there bidding on the same amount of houses, that's going to have an increase in interest rates, in purchase values. All right, if we're not working together, we should. Now, if you are looking at houses but aren't ready to speak to a lender, check this out. This is a hopes and dreams conversation. There's no commitment, there's no cost, there's no applications, no credit pulls. Scan that. Let's pick a time. Let's answer all your questions. There's so much misinformation out there that I want to make sure that you have access to the best information. Let's put a plan in place for you and your family. Hey, we would love to work with you, but it's not a requirement. We're just here giving our time and expertise to help you and your family. So that's it. Have a great weekend. Call me if you need me. Paul O'Brant's Clear to Close Brokers. And I hope you guys have a great day. Take care. Bye now.